The bigger they are, the harder they fall. And while that is a cliche, cliches are often true. The Fed just gave the market a green light to rally, and that we have. But what happens when the biggest of the biggest falter? With Apple down 4% after hours on terrible guidance and soft earnings. Today, we answer the question, are these soft results already priced in, or will Apple lead the charge lower? With breadth improving and yields falling, let's discuss what the market cares about more, the big Apple or the small 493. Hello ladies and gentlemen, welcome to the daily recap show where we talk about stocks and the financial markets. If you like this video, please subscribe, hit the notification bell, and let's get into it. And what a crazy day it was today. Apple, Microsoft, Nvidia, semis, the biggest stocks in the world except Meta let us down. But other than that, we actually saw more buying in the smaller names, the regional banks, utilities, materials, energy. So breadth was really positive. It wasn't just the big tech names holding us up. And this was really all on the back of yields. We saw the entire curve move lower, especially at the long end. Look at the 30-year, look at the 20-year, look at the 10-year. They were all down 0.13% on their yield. But the shorter end didn't move much lower. But it wasn't all yields. A lot of bears got squeezed, guys. A lot of bears got squeezed. And we got the new sentiment survey. And wow, 50% bearish into the November month. 24% bullish. Quarter of the people were neutral, and you can tell these guys right here, paper hands, absolute paper hands. I hate to bring out the crypto references. And the sentiment survey goes to show the type of money these members might be. They might be dumb money. They might actually be the people who were selling into this rally. And I get it, they led the rally. Dumb money were the reason why we were selling lower, but smart money was actually buying in the face of all of this. I mean, they were buying pretty much from this level right here, bought all the way up, and we're gonna see the fruits of their labor because I posted this on Twitter. And go ahead and follow me on X on Twitter, guys. A crazy macro rotation today, and it's likely just the start of it. Indices do need to breathe. We've come a long way, but so many bears were caught offside, and now they need to chase. Charts always look bearish at the lows. It's why TA is flawed. And if you look at the sectors, guys, technology, comm services, up nearly 1.7%, and it was some of the worst performing sectors on the day, with energy, real estate, discretionary, all up above 2.4%. And the entire sector, all sectors were up 1.89% for the day. And this broad-based bullish sentiment is on the back of what was a pretty standard drawdown. The markets fell about 10-11%, hitting correction territory. A lot of people got scared. Bears were licking their lips, but you have to understand that 10% or plus corrections occur once a year on average. In fact, 1.1% year on average. And this is for the SP 500. I actually have the small cap intra-year setback right here. And this is the type of volatility you have to stomach in the market. The average market drawdown for the Russell 2000 is 19% per year, with the maximum drawdown ever being close to 50%. And you have to understand, through all of this, the Russell's annualized return is 10.7%. An increase of 10.7% since inception. This is the volatility you have to stomach. And this is why a lot of people shouldn't be 100% invested in stocks. You should have a diversified portfolio. But much of this drawdown was brought on by the Fed, rates, and bond issuance. And we do have the Fed fund futures pricing, and we can see here that we're keeping the cash rate in about January, February around the 5.25, 5.5%. Sort of right here is when the cash rate is going to be steady. And then we see potential rate cuts into June, into July, potentially as early as May. And falling rates is very bullish for equities because ERP rises, equity risk premium, essentially the amount of extra return you get for investing in stocks, for stomaching the volatility. And right now we're sitting just above the 2% mark. With rates falling, we could see this get into the 3.5 to 5% range, which is the historical average, and makes it really attractive for investors, especially when the risk-free rate is around 4.5-5%. Let's move on to earnings. And today we had the biggest stock in the world, Apple, report earnings, and let's get into it. Apple Q4 earnings per share 146 versus 139. So Apple beat on earnings per share. They beat on revenue. They missed on iPhone revenue marginally. Service revenue grew at a 16% year over year and 22.31 billion versus 21.35 billion. They beat on service revenue, announced a 24-cent dividend, and they beat their expected margin. But this was the reaction after hours. At the lows, Apple were down nearly 4% and sort of hovering around the 2.8% range after climbing nearly 2% for the day. And a lot of this was on weak forward guidance. Let's actually get into Apple on alpha spread. Now, Apple did flag that they might not return to growth in the fourth quarter, and the market did not like that. But let's actually have a look at Apple's revenue forecast. We can see here that for a company that's trading on about 28 to 30 times earnings, a 30 PE, considering the fact that you're getting 5% estimated growth. Now, you do have a company that just makes a ton of money. $394 billion, $400 billion in a year. If you actually look at their net income, growing at 7% per year estimated, but they're making $100 billion in free cash flow. Now, they are delivering this back to their shareholders in the form of share buybacks. For a company with a 30 PE trading at 7% growth, the market probably expects a bit more. They do produce a ton of cash flow, absolutely crazy. And they are expected to grow their earnings from 2022, where we are right now, into the 130 billion range in 2026. On a 30x PE, market just doesn't like what it's seeing. That being said, Apple do have a great balance sheet as well. If we go to the financials, and this is alpha spread, guys, I love using this platform. You can actually see right here that Apple currently have $335 billion in assets, $275 billion in liabilities. They're currently sitting on $62 billion in cash and $123 billion in current assets. Liabilities, they do have quite a bit of debt, $98 billion in long-term debt. So they don't have net negative debt, but for a company that's producing $100 billion in free cash flow, and their free cash flow to long-term debt is on a 1-to-1 basis, fairly good. The debt isn't in any way going to affect them. They're not going to go solvent. This is a very solvent company. That's just the thing with the stock market. It's not about what you're currently doing. It's about what can you give me in the future. The market is all about the future, pricing in future earnings, future debt, future growth, future contraction. And if growth is going to slow, the stock price is going to move down with it. Let's get into seasonality. And we've been following this chart for the last 4 days, and it has delivered in spades. We said that the October to November turn, the last 2 days of October and the first 2 days of November, this is the returns you could get. And it's a very bullish month, 1.85%. We've taken the trade. It's been very, very good. We're still in our positions, but what about the rest of November? Here's the stats, okay? This is the Nasdaq for a Q4 rally, and it's pretty much from the October low, which was last Thursday, when I told all of you to go buy, go have a look at my videos, to the November-December high and the year end, the last trading day of the year. What you can expect to the November and December high, you can expect an average return of 13.1%, and you can expect to the year end 9.5%, and this occurs 88.5% of the time and 98.1% of the time. Very, very bullish statistics here for the Nasdaq, and I'll show you my trades in this video a little later on. Okay, look for the low and then have conviction to rally into the year end, because these stats, playing the probabilities is one way to really win in the market. This is the month on a line chart, and you can see that we've been following seasonality pretty good. We normally get a pop into November, sideways action, and then a dip into a rally towards the end of November into December. And this is true for a normal year and a pre-election year. And our game plan was to buy in the 4125 to 450 range. And I put this tweet out right here. Q4 rally to commence if the SPX, the S&P 500, manages to stay above this level by this date. What did we have today? A huge rally, broad-based rally actually. And let's get into the charts. And this is the S&P 500 year to date. We were looking at this chart and we said this key support zone, 4125 to 450 area, this was the buy zone. We came in, wicked just below it, and then we went up. And the buy confirmation was when we went above here. Going lower into the 3-month time frame, we said that the key levels that we were looking for when we broke above this key support zone was 4200, 4250, and 4300, and we reached those levels very easily throughout this entire week. And we said we want to see these resistance become support. Now the market has come up very strongly. We've taken some key levels, key high. Now I do expect the market to pull back. We can't just endlessly go higher, but the market is probably going to pull back into Friday, a bit of risk off profit taking. A lot of people, you, me, we all bought down here. We made a lot of money. Now what is going to be extremely key for the market is if we get to this 4,300 level and just base for the next move higher into the middle of November. So this is what we want to see. Ideally into Friday, we want to stay above this 4,300 level. We're trading at about the 4,340 right now. So I'm actually going to show you guys the trades I've taken. Now the instrument I chose was the Nasdaq. This is a screenshot from my phone on one of our trading apps in Australia. I live in Australia, guys, called Superhero Invest, and you can see here that all of these dots are my buy trades. Okay, so I was buying the Nasdaq 100 all year at the lows. You can see we then had a huge rally. I'm still in these positions, and you can see right here that I also bought the Nasdaq on the pullback right here as well. Now a lot of you are saying, oh, you bought the high, you bought the high. Let me explain. Okay, many will say I bought the top. The Nasdaq 100 pays a dividend of 0.5%, right? But in Australia, with the currency conversion, the Australian pesos or the Australian dollars, we actually get a dividend yield of 2.4% for this ticker, NDQ.au. The issuer is Beta Shares. 2.4% dividend, and I normally just invest my dividends almost immediately, and that's what this purchase was. Okay, so I didn't buy the top. Maybe here that was a poor trade, but it wasn't a big trade. You know, this was a dividend I bought, and I actually was buying a lot here, waiting for a Q4 rally. So I put my money where my mouth is, guys. I'm not just out here saying this stuff. I am actually in the market live trading. Superhero Invest doesn't have a demo account. These are my actual trades. You know, I'm with you. I'm trading with you. I'm in the market with you guys. Now let's get into some dark pools. Remember what we said yesterday, and this was crazy. We saw the second largest trade here move down. They didn't close it, which means they were probably looking for a couple of things. If this was a short, they were going to cover up here, provide ammo for that, or it was a long and they were going to take this higher. Either way, we now know that this was probably a shorts, closed their shorts and we ripped up, or it was a buyer who helped supported price. Either way, let's still look at this 136 level as a very key level of support, as well as now 137. No trades came in at the end of day. Very interesting. Keep that in mind. Looking at the Qs, big trade here, big trade towards the end of day here, big trade here, guys. And I have to say, look, the market, we've had a very strong run. Probably are going to see a bit of pullback. These are probably trades that are profit taking in my opinion. Supporting that case, this is the short Q, another big trade. Now this is actually 3 trades right here. This is the 3 largest trades. They're all in the exact same place. Huge levels right here. Confirmation, they're probably looking for a move up because it's the short Q. It's inversely correlated. The SP500, the SPY, and again, very same thing on like the Qs as well as the short Qs. We saw buys here, another trade's happening right here. We moved higher, probably some profit taking. I doubt it's shorts, but either way, it's going to support the market to probably move lower into tomorrow. But if we do get above these levels right here, guys, these guys are probably going to cover their shorts, and it's just more fuel for the fire to move higher. So not all bad news if it's shorts, but there are large trades at, you know, key levels after we have had a very strong rally this week. And this is something I wanted to point out. So I pointed out to you guys yesterday that the 10-year saw some big buying at the lows. Same with the TMF. This is the 3x 20-year Treasury Bull ETF. It is a leveraged ETF. You can see the 4th largest trade since inception came in right here. So a lot of things happening on Treasuries, big trades happening on Treasuries. Do I have the 10-year? And yeah, here's the 10-year. The first and second biggest trade since inception. So at the lows, we're seeing some very big trades coming into treasuries. And I think, you know, the market, we've been talking about this for a couple of weeks. I said that on the interim for the next 3 to 6 months, I think yields have topped out. And I was saying this even before the Fed's QRA announcement. I was saying this last week, you know, yields have come really far and it's doing the job for the Fed. I've been saying that for a very long time now, and we are seeing that, and we are seeing price action supporting that, at least on the dark pool trades. Unusual options activity that I want to bring to your guys' attention. Guys, this is absolutely crazy. For the very first time in 3 months, we've seen a flip on the calls and puts, especially in the big three. Have a look here. This is the SPY, the IWM, and the Qs. Normally we see puts stacked majorly, like we see huge amounts of puts against calls, especially in the last 3 months. The SPY, 981 million puts to 889 million calls. Normally this number is like 1.6 billion to 200 million calls. Okay, have a look at the IWM. Okay, the IWM is very, very similar to what it usually is. And this is what I'm talking about. We normally see like 10 times the put value. Have a look at the Qs right here. Exactly 50-50 on the puts and calls. And if you go to the total volume on the day, huge volume, 44 million. On a week that's been fairly average volume on the day. Start of the week was a bit weaker. 54 calls to 46% puts. And guys, I mean, I think this is one of the reasons why I think we should see a pullback into Friday, into further movement into the week after next. We do need these calls to soften out a bit because everybody's bullish right now. Everybody's suddenly back to bullish. I don't see any bears on Twitter. I see no bears on Twitter. Everybody's suddenly bullish. Don't chase, guys. We've already positioned. All we got to do is hold now, key levels, take profits when needed, and keep following the stats. Moving on to just a bit of data. We saw jobless claims came in but expected, 217,000. Nothing really to say there, but we do have a lot of data tomorrow on Friday. We have BAR speaking, we have non-farm payrolls, the unemployment rate, hourly wages, PMI services, as well as ISM services, okay? And then BAR speaking again. Dude's got way too much speaking roles in this job. But we're looking for non-farm payrolls, 170,000. That's what we want, guys. That's the number we want to see. So if you've watched up until here, guys, thank you so much. I appreciate every single one of you. If you like this video, please leave a comment, leave a like, share, subscribe to me. You know I love you guys.